Hi, good day. Welcome to another session here at Explore Protect YouTube channel at your Money Magnet. It's your host again, Dr. Meiya. We're talking matters finance, and we're busy dealing with this issue of cash versus cash flow. Cash is king, but yes, free cash flow is the king. If you're new to this channel, we welcome you and we hope you subscribe so that you can get notifications whenever we have these sessions. And remember to always like or comment on these videos so that we are able to have a conversation about these matters. So, cash flow is the king. Now, let's just remind ourselves what we've said, that to calculate free cash flows, which we regard as the key, you're really looking at your sales revenue, less your operating expenses plus taxes, and less your required investment in operating capital. Now, as you'll have figured it out, that to get the operating cost, you are basically then looking at your income statement of your financial statements, which essentially tells you how profitable the entity is. When it comes to the required investment in operating capital, we are looking at our balance sheet, which talks about the inflow and outflow of money. Now let's take this further and say, look, to calculate the free cash flows, you've already seen we basically need to look at both the income statement and the balance sheet. So from the income statement point of view, as you know, you'll have your revenue, your total revenue there, and your cost of sales. Now, even if you're not in products, you have figured it out by now that every sale has got a cost. So you need to, even if you're in the service industry, you need to always figure out what your cost of sale is. So for this fictitious company that we're dealing with at the year 2020, we're going to be looking at these financial statements to appreciate and or calculate the free cash flows. So from the income statement, we look at the sales less the revenue, and that gives us our gross profit, or your first level of profit. And then from that, we will then subtract the operating expenses or your overheads. So I've already spoken about this. So let's just move on to the next conversation. Now, that's what we'll be looking at, or part of what we'll be looking at from the income statement. Now, let's move to the balance sheet part of the financial statements. As you know, you have your current assets and liabilities, and maybe this is the very right to pause here and say, to further substantiate our argument that says cash is king, but free cash flow is the king, really with cash will be sitting here on current assets. Whereas when you're talking about the cash flow, we're looking at the movement of cash flow throughout the entire value chain of your operations. So from the balance sheet point of view, there are your current assets and your current liabilities. And here we're really interested in the net working capital, which is the difference of the two. And then maybe let's pause here again and remember, what do we use assets for? And this is where your accounting financial balance sheet differs a bit with your finance balance sheet. Because from the finance point of view, we're really interested in how you're using your capital. You can really use your capital as fixed assets, or you can use your capital as your net working capital. Now we can see clearly here on this balance sheet that from the difference of your current assets and liabilities, that give us our net working capital, our day-to-day how we're running our businesses. But we also use capital for fixed assets or capital expenditure. Now let's move to the next step. Now that we have understood that, once you then subtracted your overheads, your operating expenses, you come to one of the key measures or key metric in your income statement, your earnings before interest and tax. This is your operating profit, or otherwise what we like to call your second level of profit. And that's when you've accounted for all the expenses that relates to your business, excluding interest. Now, I mention interest particularly to remind us that interest is not an operating expense, but it's a financing expense. So that's why we take it out when we calculate a second level of profit. Now, likewise, when you follow the same trend on our balance sheet, we now look at both the fixed assets, available capital that we have, the fixed assets, and we combine that with our net working capital to then calculate for ourselves the closing net assets for this period. Now, once we've done that, maybe let's just proceed here on the balance sheet. Now, the closing net assets for this particular year, 2020, here is 3.59. You've just seen there, and we've added this too. But a preceding or the opening net asset that we brought forward from 2019 was sitting at 5,478,000. Now, you can now start seeing here that the closing net assets for 2022 is relatively lesser than the closing assets of 2019, which was the opening net assets of 2020. Now, when you take the difference of the two, because we want to now look at the movement of capital during the course of 2020, we can see that we've got a negative assets. But this is actually good, because what it's telling us is that there's been an injection in growth opportunities by this business. That's what it's telling us, because we can see that by the negative number here, that we started here, opening year with higher assets. During the course of the year, we use some of those assets to end up with 3.5 million, meaning that we invested in growth. Now, going to the income statements, I've said that we don't consider interest when you're looking at our operating expenses. That takes us to the earnings before interest and tax, or your operating profit. Now we can now less or subtract the interest and tax here. And if there are other deductions, I mean, this doesn't always happen, I'm just including it there for completeness sake, you then also need to add other deductions that will otherwise don't fall in your overheads and or interest and expenses. We've already spoken about that. Now, let's just go back. When you look at the capital adjustments during the course of the year, and we link that to the movement of net assets, the negative number, it's suggesting to us that this company that we're dealing with here is probably in a scaling environment, either in scaling environment, or there've been growth opportunities that this company has seen, and it's investing in that. So we look at the capital adjustments, and you want to now take the net assets from the opening and the closing and subtract the capital adjustments that we've seen throughout the course of 2020, which is the number that will come in the next slide. So when you do that, where have we come? We've come from the sales as far as the income statement is concerned, and moved along the line up to where we added other exemptions, deductions, to the ending point where we can now see that once we've done all that needed to be subtracted from our sales, we then remain with retained profits. I mean, what we could do here, if you really want to check, but it's not the purpose of this exercise, we can do it later. We can look at the profitability. What are the profit margins here? We can do that later. But what we're interested in here, firstly, we can see that this company has been profitable, because we can see there at the end of the year, there's a positive net of 2.3 million. Then we can also see here, when you come to the balance sheet part of our financial statement, that having looked at how we use the capital, and having taken the difference between the closing and the net and the opening assets, and having accounted for capital adjustment during the course of the year, the capital change during the course of the year is 400,001. Really, the message to take from this observation is that there's been an investment in growth when you're observing the activity of the balance sheet. Now, but let's bring it now together to the purpose of what we're doing here. It's understanding the cash flow of this entity. And to really understand the cash flow, we then need to take the retained profit from the income statement and subtract the capital change from the balance sheet. And what we're seeing here is that we've got a positive net cash flow of 2.8 million when we round it off. That is about the free cash flow. I hope you enjoyed the conversation. And if you really did, please like this video or comment on it. If you want to engage with me, below this video, there are links where you can find me on. And I urge you to spend some time on the channel here, because there are resources that you can get in building your business. It was your finance doctor, and I hope you enjoyed the conversation.